Warren Buffett just sold $84 billion of his Apple stock, 390 million shares, which was almost half of his total holdings. This is on top of Microsoft and Google's parent company, Alphabet, losing 6% of their market cap in the month of July alone. And Apple's market cap right now is $3.3 trillion. That's just over the size of the UK's total GDP of $3.1 trillion, and they are the sixth largest economy on the planet. Now, I don't know if this was already priced into Apple stock. As you can see, they stumbled from 235 to about 219 in the month of July and the beginning of August. This company has the largest market cap on the planet, and it's trading on the NASDAQ stock exchange. So I am very curious to see what's going to happen on Monday if this hasn't already been priced in. And it looks like the overall tech sector is coming down kind of hard from the AI craze. Don't get me wrong, AI is very promising. It is going to change the world in ways we can't even comprehend right now. But I believe that a lot of people were investing like that change was already here. I mean, last month, Bloomberg came out with an article. The NVIDIA CEO unloads shares amid stock peak from the AI craze. But what Warren Buffett did is much deeper than just tech, because he also cut about $41 billion from Bank of America, which was his second largest position. And his company, Berkshire Hathaway, is now sitting on $277 billion in cash. That is a $90 billion increase just from the previous quarter this year. Warren Buffett's reasoning for selling all this stock is that he thinks that the 21% federal tax rate on the gains was likely to grow. Matthew Seifert, an analyst at CFRA Research, has said that if you look at the entire Berkshire picture and the macroeconomic data, a safe conclusion is that Berkshire is getting defensive. Now follow me as I take you on to this trend. The second quarter this year was the seventh straight quarter that Berkshire sold more stock than it bought. Let's go back to a Bloomberg article on May 6th of last year. Warren Buffett said it's been an incredible period for the economy, but that's coming to an end. And that period he's been talking about occurred right after the Great Recession. When the economy crashed in 2008, the Federal Reserve dropped interest rates from 5.25% all the way to zero. And for 8 years after that, money was as free as it would ever be for large banks, small banks, and all kinds of corporations to borrow from. And even when the economy recovered and the Fed raised interest rates slowly to 2.5%, things were still fine. And COVID hits, and boom, 2020, back to 0% interest rates. And that all ended in 2022 when the Federal Reserve jacked up interest rates faster than they have in the past 30, 40 years. And this is what Warren Buffett was talking about. The period in which American firms were awash with cash at an unprecedented level was finally over. So Buffett isn't talking about the average American worker. He is talking about the investor. This period was incredible for large investors. Interest rates have been just as high, if not much higher, and the American worker was able to live a high quality of life. Take a look at this table of interest rates from 1972 to today. The super low interest rates disproportionately helped out any company that was publicly traded, and of course, banks. This may be a good thing for the average American, because now the asymmetry of power between the large corporations and the regular guy has been lessened. My name is the Geo Husar, and let's keep our eyes open for what's going to happen on Monday. Thanks for watching.